Population Growth Downswings and Consequences,
Mhm.
one source. This text discusses Australia's population growth trends, noting a faster than anticipated decline following a post-pandemic surge. This deceleration has important implications for the labor market, and particularly the housing market, potentially easing demand pressures and slowing rent inflation. The analysis also touches on discrepancies between different population data sources and highlights how state-level population changes can differ from the national picture, emphasizing that demographic shifts can occur quickly. Welcome to the Deep Dive. Today, we're jumping into one specific source to get our heads around a recent and honestly pretty surprising twist in Australia's story.
Yeah, it's definitely caught a few people off guard.
Our mission today is really to unpack the speed of this slowdown in population growth, after that huge surge we saw post-pandemic.
And figure out what it actually means.
Exactly. What does this surprisingly quick change mean for you, especially when it comes to, say, finding a job or even just finding a place to live?
It's a really interesting shift because, we often think of population trends as these slow-moving giants, right? Glacial.
Totally. Decades-long shifts.
But this source really brings home how quickly things can turn. And the ripple effects, well, they're pretty significant.
Okay, let's get straight into it then. We all remember borders reopen and boom, Australia's population growth just surged. It felt like planes were landing constantly.
It really did feel like that. And that post-pandemic rebound, it peaked quite high. Actually, just over 2.5% year on year. That was back in the third quarter of 2023.
And the why behind that surge felt pretty obvious at the time, didn't it? Just this massive catch-up.
Exactly right. You had all the students who couldn't get here during the closures, especially, a big wave after China reopened its borders early last year.
Right.
Plus, you had these backlogs, people whose permanent residency visas were approved, but they simply couldn't travel, or applications just piling up. Suddenly, they could all arrive.
So yeah, this big spike, definitely expected. And because it was a catch-up, the logical next step, the thing everyone assumed, was we'd see an unwind, a sort of natural slowing down from that peak.
An unwind was absolutely anticipated, yes. And look, this pattern, it wasn't just Australia. We saw similar things happening elsewhere.
Oh, really? Where else?
Well, places like Canada, New Zealand, the UK, Germany, too, they all had this kind of post-opening surge, then a correction phase. Although Canada's surge was actually even bigger than ours.
Interesting. Okay, so surge expected, unwind expected. But the source says this is where the story takes a turn. The surprise element.
This is the core finding, really. It's the pace of the unwind, the speed at which that growth rate has dropped. It's just been faster than pretty much anyone was predicting.
Faster than expected. How much faster? Like, what were people forecasting before?
Well, earlier on, you had bodies like the RBA and even the authors of this source thinking that growth might sort of ease down to maybe around 2% year on year by the end of 2024.
Okay, 2%.
Yeah, and some of the, the leading indicators, things that usually give you a heads up, we're even hinting it might stay a little bit above that level.
But the actual numbers, the official data, told a different story.
They really did. The latest data the authors had, which was for the September quarter of 2024 released back in March, it showed the annual growth rate was already down to 1.8%.
Wow, okay, so already below that 2% prediction.
Exactly, and that's led to a pretty sharp rethink for the whole calendar year 2024. Now, both the RBA and these authors are working on an assumption of growth around 1.7% for the year.
That's quite a revision downwards in just a matter of months. Does the source give any hints about why it slowed so much faster? Or why those earlier indicators might have been a bit off?
It's cautious, doesn't claim to have the definitive answer, but it does float a couple of possibilities. One might be slower processing times for certain visa types, maybe unexpectedly slower.
Okay. Bureaucracy, maybe.
Could be. Or another idea is maybe more people who were here on temporary visas or sort of long-term non-permanent ones are actually leaving than was factored in, departures being higher.
Interesting possibilities. So the speed is the main shock here. Now, you mentioned the source also digs into the data itself, some of the complexities in actually measuring this stuff, especially for the job market.
Yes, and this is a really crucial point, actually, because when we talk population, there's the total population, everyone, but then there's the working age population. Usually that's defined as people aged 15 and over.
Right, and I guess the working age group probably grew even faster initially during that surge.
That makes perfect sense, yeah. Because like we said, that big influx was really skewed towards international students, younger temporary migrants. They mostly fall right into that 15-plus bracket.
But the source points out a potential hiccup when you compare different data sets, like the labor force survey, the LFS, which gives us our monthly job numbers, and the official population count, the ERP.
Exactly. The LFS, it has to come out quickly each month, right? So it uses projections of the population before the final official estimated resident population figures are locked down.
Oh, okay. So the LFS numbers are based on an estimate that might change later.
Precisely. It means the LFS estimates for the working age population can sometimes need, well, quite significant revisions down the track once they get benchmarked against those more solid ERP numbers.
And we've actually seen that happen recently, haven't we?
We have. There was a notable quarterly adjustment back in February. The estimated growth of the working age population across 2024 got revised down. It went from 2.4% to 2.1%.
Which might sound small, but when you're talking about the whole working population.
It's a big number of people, yeah. It affects the denominator for things like the unemployment rate calculation.
So, okay, if the population figures used in the job survey might shift around a bit,
Yeah.
how do you get a clear read on what's actually happening in the labor market right now? How do you avoid getting, as the source puts it, a bad steer?
That's a really practical question. And the source suggests focusing more on ratio measures.
Ratio measures, you mean like percentages instead of just the raw headcounts?
Exactly that. Things like the employment to population ratio, basically, what percentage of working age adults actually have a job, or the participation rate, the unemployment rate itself, broader measures of underutilization.
Why are they better?
They tend to be more robust if the underlying population estimate changes a bit, because you're looking at a proportion relative to whatever the estimated population is at that time, not just the absolute number of employed or unemployed people, which is directly affected by the population estimate.
Gotcha. It's like looking at the share, which is less sensitive to the total pool size changing slightly.
That's a good way to put it. And the source points out this isn't exactly a new issue. This kind of data complexity popped up back in 2012 as well, when population growth patterns were also shifting around quite a bit.
Okay, so we've got this faster than expected slowdown, some data quirks to be aware of. What are the real-world consequences? You mentioned jobs and housing right at the start.
This is where it really hits home, isn't it? For the labor market, the logic is pretty straightforward. If the population isn't growing as fast, well, employment growth doesn't need to be quite as rapid just to keep things stable, just to absorb the new people looking for work.
Right, even if participation rates are still high or rising.
Even then, the sheer number of new jobs needed each month to stop unemployment rising is lower than we might have thought just 6 months ago.
Fewer new arrivals means less pressure on the job market, relatively speaking.
That's the idea. And then you switch to housing, and the connection is, if anything, even more direct. Fewer net new residents means, quite simply, less demand for additional homes.
And the source really emphasized how that initial big population surge was a major factor pushing up rent inflation like crazy, wasn't it?
Oh, absolutely. And it even gave established house prices a sort of second wind in many cities, even while interest rates were climbing sharply.
Why was that link so strong?
It was a huge mismatch. The construction industry just couldn't magically ramp up supply by, 30 or 40% overnight to match that sudden jump in demand from new arrivals. That imbalance between supply and this surge in population-driven demand, it poured fuel on the fire for rents and prices.
So, logically, if population growth is now slowing faster than we thought,
Yeah.
what does that mean for housing going forward?
It strongly suggests that one of the key pressures driving up demand recently is easing off, maybe quite significantly.
So rents might not keep climbing so fast.
That's what the source expects, yes. Rent inflation should slow further. And it also hints at something interesting for house prices later on. When interest rates eventually do start coming down,
Yeah.
the boost that lower rates typically give to established house prices, it might be a bit less powerful this time around simply because that underlying demographic demand pressure isn't as intense as it was.
That's a really clear cause and effect chain. But the source adds another layer of complexity, doesn't it? It reminds us that Australia isn't just one single market.
Absolutely crucial point. These national averages we've been talking about, they mask some really big differences between the states and territories.
You can't just assume the national trend applies everywhere.
Definitely not. Population growth rates vary significantly.
Did the source give specific examples? for that year leading up to the September quarter.
It did. It pointed out that Victoria, Queensland, and Western Australia were all growing faster than that national average of 1.8%. Victoria was up at 2.1%, Queensland 2.0%, and WA was leading the pack at 2.5%.
2.5% in WA. Wow. And presumably others were lagging behind.
Yeah, New South Wales was notably lower, down at 1.4%. And the smaller states and territories generally were also below that national average.
What causes those big differences between states? Is it just overseas migration landing in different places?
Overseas migration plays a role, but a really big factor is net interstate migration. That's Aussies moving from one state or territory to another.
People chasing jobs or lifestyle changes.
Exactly. NSW, for example, was losing people to other states, negative net interstate migration. Victoria was around 0 recently, but that number's been really volatile. It was heavily negative during lockdowns, then positive before that. And WA is another state where those internal flows can swing its relative growth rate around pretty quickly.
Okay, so bringing this all together then, if you had to boil down the main message from this deep dive, what would it be?
I think it's a really powerful reminder that these things we often file under demographics, things we assume are slow-moving, like tectonic plates.
Yeah, things that change over generations.
They don't always behave like that. The post-pandemic experience, and especially the speed of this recent slowdown in Australia that the source highlights, it shows these seemingly stable trends can actually shift gears quite quickly.
And those rapid shifts have real, immediate consequences.
Absolutely. They filter down very fast into things that affect everyone, like the job market and the housing market. It really underscores why keeping a close watch on these population shifts is just so important.
Totally agree. So just to quickly recap the key points for you listening. We saw that huge post-pandemic population surge in Australia that was expected. But the real news, the surprise from our source, is how much faster than anticipated that growth rate has since cooled off.
Yeah, leading to some significant downward revisions in the forecast for this year. We also touched on the data complexities that arise, especially with things like the monthly labor force survey, and why focusing on ratio measures like the employment to population ratio can often give you a clearer signal through that noise.
And crucially, we connected that faster slowdown directly to the real world. How it might ease the pressure valve in the labor market, meaning maybe slightly less rapid job growth is needed now, and potentially, quite significantly, how it could take some of the heat out of the housing market by reducing demand for new homes.
Which, importantly, should help slow down that rapid rent inflation we've all been feeling.
And we finish by remembering that this isn't a uniform story across Australia. The picture looks quite different depending on which state or territory you're in, partly thanks to people moving around within the country.
That state-level detail is key.
It really is. It does make you stop and think, doesn't it? Consider how quickly something that feels so fundamental, so, I don't know, foundational as population growth, can just unexpectedly shift gears. Yeah. And then how that single shift can ripple through things as personal and vital as where you live and where you work. It makes you wonder what other seemingly stable, slow-moving trends out there might actually be vulnerable to similar, rapid, unforeseen changes. Something to mull over.